guys, my name is Chris. I wanted to show you something besides investing. Some of you might be impatient. You don't want to wait to invest and you want to try and make some fast money. This is pretty risky. I wouldn't recommend this for everybody. This is called options trading and it's more like day trading. And I would probably start with Play Money. There's plenty of websites out there. You can start an account and use Play Money in practice. This basically follows price action and timing the market. This is not investing, so let's take a look at what options trading is. So just a quick tutorial just to give you guys a different perspective on the stock market. All right, let's get into it. All right, so in options trading, you have what's called options contracts. You're buying or selling contracts at a specific price at a specific expiration date and giving you the right but not the obligation to buy or sell. When you buy a call option, you're basically betting on the price going up. When you buy a put option, you are basically betting that the price is going down. And today, for these purposes, I'm going to show you call options. Two things you want to look at. You want to look at the strike price that you're buying the contract at and your break-even price. Your break-even price is what you have to go above in order to make profits. And also you want to look at your expiration dates. Your expiration dates, once it reaches, you can expire your contract worthless, you can make money, or you can lose money. Now you don't necessarily lose all your money because you can get out the trade at any point for, I don't know, a 10, 20, 30%, sometimes a 50% loss if the price moves very fast. So this is something that you have to be in front of your computer screen and looking at the price action of the stock. We're going to use Nike for example. So let's say the price of Nike is currently at $59. You think the price of Nike is going to go up to $60, let's say in 2 days. And you're going to pay 35 cents a share. Let's say this contract costs 35 cents a share. So you're really paying $35 for this contract. Because for every options contract you buy, you have to times the price that they show you at 100. And I'm going to show you. We're just going to take a look at this, all right? All right, so here we are on Robinhood. This is ticker symbol NKE for Nike. We are going to do an options trade on this. On here, you will go to Trade Nike Options, and it's going to bring you to another screen. And it's going to give you the option to buy, sell, call, or put. So remember, we're going to buy a call. We're not selling. This is for another day, another training video. But we're going to buy a call. So let's say in 2 days, you think the price of Nike is going to go up to $60 because right now it's trading at $59.57. When you click on here, you get a little more info. Only thing I look at is my break-even price, implied volatility. See how volatile the stock is. And one thing I look at is the delta. The delta is actually the percentage of if you're actually going to make a profit or not. So this is saying you have a 36% chance. And we're going to click on, remember I said 35 cents, you're actually paying $35. When you click on here, it's going to bring up your total cost, $35.04, because obviously Robinhood's got to make some money somehow, right? So down here you can see it shows you a little chart of your projected losses and profit. So as you can see here, your break-even price is around $6.35. Anything over this is just profit. So as you see, if I move the cursor, the higher the price of Nike goes up, the higher your profits. So it's actually telling you $70, $85, $100. If it goes up 3%, you're making $100. Your max loss, if the price is starting going down that day and you don't like the way the price is going, you can pull out of this options contract, take your losses and keep it moving. Now, if you let the price keep going down, you're gonna see you just lost your $35. So this is why I don't think it's exactly like gambling, because in gambling, when you place your money on the table, you can either win or lose. You can lose all your money, where you can win. But here you actually have a chance to get out of the contract and take your losses and, continue to trade another day. And what I wanted to do is I want to show you some real life examples. Oh, and if you are going to do this contract, you would click review order, and then you would click submit. All right, so we're going to go back. I want to show you some real life examples here. All right, so I'm going to show you some screenshots of some examples of some trades I did this year. This is Nike. This was in February 10th. If you can see here, on February 10th, I bought Nike a $69 strike price, expiring, looks like a week from February 10th. So I bought this contract. I bought actually two. Each one cost $2.60 for a total price of $520. Because remember, you're actually paying for one contract, you're paying $260. So you times that by two, because it's two contracts, $520. And I sold this, let's see, February 10th. I sold this the next day. I sold it for $650. So my profit was a little over $100. All right, so that's one. So you see, $69 call, February, expiring February 21st. I sold it the next day, and it tells you the time I sold it, February 11th at 11:07 a.m. Let's look at another one here. This one is one that I'm currently in on right now. This contract, if you can see up here, it's a $10 call. It expires next year, January 16th. I bought this at 9:45 in the morning, and I bought it for $1,150. I'm currently in this contract, so I'm going to show you what it shows right now. So right now, I am up $158. This can go up and it can go down as well, but I have till next year in January to sell this. So from the time I bought this, this was actually today, I am up over $158 on this, 13%. So this is one, this is called SOXL. This tracks basically the semiconductors, the computer chips like AMD, NVIDIA, Intel, all those computer chips that you find in your gaming systems or gaming computers. This is another one which I bought back in May 22nd. It says the time I bought it, $14 call, QBTS. It's a quantum computing company. I saw that the price that day, there was a lot of volume and the price was shooting up. And look, the expiration date is actually the day after. I bought one contract for $380, and the next day I sold it. Actually, I sold it the same day. I'm sorry. I sold this a couple hours later for $494. So I bought it for $380 and sold it for $494, a little over $100 profit. I'm gonna show you some losing ones. Don't worry. This one, I bought February 26th at 9:36 in the morning. I bought one contract for $164, and I sold it for $127. So I lost $30 on this. So I basically saw price was going down and took the rest of my money and called it a day. And this one, let's see, I bought this 9:36 in the morning, and as you can see, I sold it minutes later, 9:42. This one was, this company's NVIDIA. I bought $135 strike price. I got it on May 29th. I paid $494. I bought this at 9:31 in the morning. I think I sold this the next day. So I sold this the next day at 9:35 in the morning. Let's see. Yeah, I sold it the next day, $495. I sold it for $829. So I made about $300 on this. So that's not bad. Let me show you another one. I want to show you one where I really lost some money here. This is Meta. I bought a $645 strike price expiring March 7th. I bought this March 6th, so this is basically in one day. I bought this for $990 at 10:29, and I sold this a couple of hours later. So I basically lost almost $500 on this. So as you can see, if you're not paying attention, you can lose a lot of money, but you can pull your money out too. I think I waited too long on this one, hoping that the price would go up, and it never went up. Now this is how you track prices for Nike. So this is a 3 month range. This is daily price actions, and as you can see, in the last month or so, this has been trading between $59 and $64. So this is how you can kind of tell where the price is going to move to. So right now it's down here, so you can say by next week this should reach around $61, $62. And this is how you can do some technical analysis on the price action and the contracts you want to buy. All right, I'm gonna show you one last one. This one is Google. I bought this back in May 16th. I bought one contract for $375, and around 3:37 p.m. I sold this. Looks like 2 days later for $549 for a little over $150 gain. So that's it for today. I just wanted to show you real quick how to the different side of the stock market. If you like to day trade, if you like swing trading. This is definitely more riskier. I would try to start with a play money account, or what they call it, paper money accounts. There's websites out there, different brokerages you can practice with. So until next time, I appreciate you for watching. If you get anything out of this, let me know. Until next video. All right, thanks. Bye.